Hello. In this 15-20 minutes movie, we will briefly overview the Swedish tax system. Let me say a few words about us, Contus Group in brief. So we are an auktoriserad redovisningsbyrå in Sweden and also authorized in Norway, auktoriserad regnskapsførselsselskap. We are able to provide accounting services and help you establish companies in all three countries. In Lithuania, there are no such thing as licenses, therefore we don't have anything. In all three countries, we have 560 clients, and the turnover is €1 million, roughly, plus minus. Let me follow this plan. First of all, we talk about tax liability to Sweden. Then we briefly take the tax, like tax rates, tax on salaries, tax on business profit, and tax on capital gains, because there are three different categories in the Swedish law. We'll mention social security contributions, talk about value-added tax, and tax on some assets. Some selected classes are taxed. So first of all, you have determined whether you, as a foreign company, if you are a foreign company, have a tax liability to Sweden. So in order to know whether or not one has to pay taxes in Sweden, one has to decide whether one's business is tax liable to Sweden. In other words, we speak about permanent establishment in Sweden, some sort of longer operations, longer operations at fixed place. In general, it's very complicated matter, but there are some simple thumb rules where you can be sure that you're on the right side. After this, you are decided that the company is tax liable to Sweden. It's very important to decide whether the individuals working in company, owning the company, are tax liable to Sweden, because there may be different situations, very different. Briefly, if a business has a permanent establishment in Sweden, then it's tax liable to Sweden. This in turn means that a business has a bookkeeping duty in Sweden, according to the Swedish rules, and a duty to submit appropriate declarations to Swedish tax authorities. We are talking about foreign business, not a Swedish company. Bookkeeping duty and declarations, appropriate declarations. If we sort of look at different income categories, because that's the way how the law is constructed. So the law is constructed showing three different categories of income, which has slightly, well, sometimes much different rules of calculation, and apparently different rates. So one is salaried income. So a lot of things are coming to the salaried income. Another category is so-called business income, or inkomstslaget näring, as it's called in the law. And in this, you mainly tax the business profits of your individual company or of your limited liability company, also foreign company as well. And again, there is a third category, income from capital, or inkomstslaget kapital, which taxes, capital items, mainly with the individuals, but there are variations. So if we go on tax on salaries, so there is a progressive salaried income taxation with the following income brackets. The figures are from 2019, from 0 to 19,067 crowns. The taxation rate is 0. Approximately 32% from 19,067 to almost 500,000, 490,000. And the reason I told approximately, because it varies from one commune, Swedish commune, to another. Sort of regions has different taxation rates, not much, but they're slightly different. Above that, above 490,700 Swedish crowns, comes additional taxation rate of 20% on that income that lies on the top of that. And it stretches, the tax bracket stretches to 689,000 crowns, roughly, yeah, a little bit more. Above this, well, let me say roughly 700,000 crowns, or 690,000 crowns, comes into the effect the third bracket, additional 5%. So the total rate will be the communal rate 32, let us say 32, plus 25 additional, that will give, well, substantial taxation. The amounts are per year. Sort of, well, taxation is made per year. Again, it's possible for foreigners who are not taxable in Sweden and stay under 183 days in Sweden. It's possible to pay flat withholding tax with a tariff of 25%. That's completely possible. As I told before, income within the tax bracket so is taxed at specific rates. Every other is taxed at this communal tax rate plus the extra bracket, extra percentage. There is a quite advanced system of deductions for this ordinary tax on salaries, but there is no deductions available for SINK except of two things that they may be included sort of into income, but if you pay them privately, that's your problem because they are not deducted. So SINK in a way is a withholding tax. Income tax on salaries is deducted by the employer, and it's called A-skatt. It's paid directly by the employer to the Swedish tax authorities. It says this is a duty of an employer which you cannot go away. And this amount the employer pays is still a preliminary amount. It sort of will be adjusted upon submission of annual declaration, which every individual is obliged to submit. If one is liable to pay taxes in Sweden, one must submit the declaration, and into the declaration the income from all over the world has to be included. I've written that don't forget the Lithuanian income here because this presentation was written for Lithuanians. But don't forget any other income from your home country that you may have received, whether you are tax liable to Sweden. Exchange between the tax departments of different countries are good, and it's a very bad idea to forget, because in a year, in approximately 1 year, they can find it. In addition to income tax on salaries, the employee pays 7% of pension contribution to the public system. This income is capped at 590,000 roughly. The employee contributions are today fully tax deductible. So once the employer has paid the tax, ASCAT, and once this has been paid, you don't pay anything extra. Or you may pay something extra, but not because of this additional 7% tax. Well, the tax on business profit is taxed at flat rate, and this rate is 21.4%. If a business is liable to tax on business profit, that means it has to produce a careful accounting, bookkeeping of all its income and costs in Sweden. Of course, not all financial costs that are reported as financial costs can be reported as taxable deductions of taxable business income. And again, the certain rules are different from the ones you get used in your home country. One also has to submit an annual profit tax declaration, which includes the profit loss account and the balance sheet. You see, if one compares the Swedish and, well, I compare to one of the Baltic tax systems, so the base for the tax on business profits, as we found, is smaller than in Sweden. That means the income is actually higher in the Baltics. Or in other words, the Swedish tax deductions are more generous. So therefore, it may partially or fully compensate the difference in tax rates. Be aware of that. The capital gains, the tax on capital gains is a flat rate of 30%. The capital gains are defined as an income that cannot be attributed to business operations or to salary. For example, rental of private capital assets, such as your villa, real estates, like dividends, like profit on sale of assets, and interest payments. However, there are many exceptions to that rule, so that the rate can become everything from 20% to much higher figure than 30%. For instance, the dividend payments from a closely held private company are often to a bigger part taxed as income from salary. It's very important to remember that if an individual is tax liable to Sweden, so this dividend taxation system is also applied for the foreign dividends and foreign capital gains. That means you should, in your private declaration, you should put not only the salary earned in Sweden, but also the salary earned elsewhere, for instance, in one of the Baltic countries, one of the Eastern European countries, as well as dividends from that country and any other eventual countries. You may have dividends. The foreign closely held private companies are also considered closely held fåmansbolag by the Swedish tax authorities. The rules for taxation of these companies are identical to those of Swedish companies. It may imply that the part of dividend income will be taxed as Swedish income from salary, in case if your salary is too small compared to the dividend. The foreign tax, if you pay the foreign tax, it will be credited to payable Swedish tax, but that's only in the situation when the foreign taxation was made by a foreign country according to double taxation agreements. If it appears that it's not according to double taxation agreements, so then nothing is credited, and then you are in big trouble, because you should communicate to both tax departments in two different countries and ask one of the tax departments where you are not taxable, of course, not tax liable, to return, in order that you can pay the tax in Sweden, because Sweden is not credit the Swedish tax. And that's a trouble. But don't fall to them. Don't try not make sort of tax pay. But if you're sure that you are sort of in tax liable to Sweden, so then don't try to pay taxes in the foreign country, because it most probably will be against the double taxation agreement between Sweden and that foreign country. Or maybe not. It's very different from the situation. Let me talk about social security contributions. The Swedish social security contributions are totally paid by employer, and there are, of the flat rate, 31.42% altogether. All obligation to pay social security contribution arises when employer has employees which are working in Sweden, and this includes also posted employees. This obligation may be cancelled upon showing up a A1 form from another EU country. Social security contributions are paid only in one of European Union country. That is, once you got the A1 form, for instance, from a home country, it means you don't pay social security contributions in Sweden. And reading this sentence backwards, if you haven't got the A1 forms, despite that you paid social security contributions in your home country, you have to pay social security contributions for your posted employees, and that means you pay double. But again, you should probably talk to your home country and ask them to return. If they don't issue a A1 form, so they should return the fees. That's the deal. If they don't, so no, that shouldn't happen. Value-added tax. The main rate for Swedish value-added tax, mervärdesskatt or moms, is 25%. Some branches, as food and services like hotel room rental fees, are charged by lower VAT rate, that is 12%. Again, figures are from middle of 2019. autumn of 2019. Sales of books, other publications, admission tickets to cultural events, and travel within Sweden are charged with even though lower rate of 6%. The threshold start paying VAT in Sweden is much lower than the one when the business becomes permanent establishment in Sweden. That is, you probably will become liable to VAT much earlier than you become a permanent establishment in Sweden. The threshold is sort of the amount threshold for the amount from which you start paying VAT is 0. That means sort of if they consider you operating in Sweden, which you probably do, then you start be registering as soon as possible, because otherwise you will get sort of VAT liability. Again, be warned, the deduction rules are, well, different from your home country, so don't think they are identical. They are not. There is also some tax on some asset classes, like in general in Sweden, unlike maybe some other Nordic countries such as Norway, where we have operations, so we know there is no tax on privately held assets. Only capital gains on the assets in Sweden are taxed then by a 30% rate, you remember, and call this capital tax. However, some classes of assets, such as living real estate, are taxed from the value. For instance, if you own a house, so it's taxed by 0.75 of its estimated market value, while your flat will be taxed by 0.3 of its estimated market value. This just a brief overview of a Swedish tax system. If you're looking for more information, please visit our blog Contus-accounting.se, or you may also write us an email, call us, and so on and so on. And you can find this on www.contus-accounting.se. Thank you for the attention.